A landmark hearing on Capitol Hill tomorrow as the main players in the Reddit revolution face lawmakers. We just got some glimpses into some of their testimonies. Kate Rooney joins us now with the details. Kate.
Hey, Melissa. Robinhood, Melvin Capital, and Keith Gill, the Reddit trader who goes by Roaring Kitty online, all out with their written testimonies ahead of the GameStop hearing tomorrow. We also did just get Reddit out. I haven't had a chance to look at that one, but heads up that it is out at this point. But we will start with Robinhood and the CEO, Vlad Tenev, who right out of the gates plans to address some of the allegations that Robinhood was colluding with the hedge funds to shut down the buy side of certain trades. He says that, quote, any allegations that Robinhood acted to help hedge funds or any other special interest to the detriment of their customers is, quote, absolutely false and market distorting rhetoric. Tenev also highlights some of the back-end systems that were stressed that week in January, including the company's value at risk, which they say nearly quadrupled over those 4 days that GameStop was being bid up by traders on social media. And by now, this is probably the most famous of those traders, Keith Gill. He also released his testimony this afternoon, and in it he says the idea that he used social media to promote GameStop stock is to unwitting investors is, quote, preposterous. His channels, he says, was for educational purposes. He also highlights that he is an individual investor. He isn't affiliated with a hedge fund. And finally, he's still bullish on GME. He says the company was dramatically undervalued by the market. Gill is also facing a new lawsuit today and accusations of securities fraud. Finally, Melvin Capital CEO Gabriel Plotkin, who was, of course, short GameStop. He says the January frenzy was untethered to fundamentals. He also says that he was humbled by what happened in January, and investors in Melvin suffered significant losses. He also says that the firm had been betting against GME since 2014. Melissa, back to you.
All right, Kate, thank you. And as Kate had mentioned, the Reddit CEO's testimony is out, so we're getting through that right now. We'll bring you any of the headlines there. For more on what to expect during Thursday's hearings, let's bring in former SEC Enforcement Division Senior Counsel Jacob Frankel. Jacob, great to have you with us. Who do you think has the most at stake tomorrow?
Well, I think everybody has the same, pretty much the same stake, and that is they're all going to be, for the most part, under the spotlight, accused by members of Congress. And at the end of the day, it's really going to take an investigation to figure out what actually happened. Was somebody responsible at a level that constituted a violation of the federal securities laws? In some respects, it's almost like a political debate. Is somebody going to make a mistake at the table? Is somebody going to say something that will put them in deeper trouble, or at least give rise to an issue, whether it be in civil litigation or in the context of the inevitable ongoing SEC investigations? So my expectations for this hearing are pretty low, because at the witness table, it's about being safe. And for those asking the questions, it's about showing their interest, showing their commitment. But what can Congress really do here is, I think, a much better question. I think the obligation really is at the SEC level to figure out structurally and substantively what happened, what can be done, and is anybody culpable?
Yeah. In terms of what can be done, though, Jacob, I mean, all of these parties who are going to be sitting at this table, either virtually or in person tomorrow, they all play by the rules as they are written today. As Keith Gill or Roaring Kitty had said, if you actually take a look at his YouTube channel and his videos and his posts, he makes it very clear that it is for educational purposes only. Take that at face value. He had full disclosure in terms of, this is where I stand, this is my position, and I'm not trying to promote the stock in any way. Melvin Capital, they shorted according to the rules of the system. And they paid the price for it. And then they had to get an investment from Citadel. Robinhood, they played by the rules of the system. And yes, their value at risk ballooned over the course of that week of January 25th. But they still played by the rules. So what are we looking for exactly?
Well, I mean, a terrible analogy, but somewhat, but a somewhat interesting, comparison was, was anybody shorting stock? Before 9/11, were people selling stock options, were selling, trading and put options before 9/11. I mean, ultimately, it's going to require an investigation to figure out whether what we're hearing at the table is really what happened. Were there coordinated efforts? Was there best execution? And it's only at the end of an investigative process that we're going to find out. And I don't think you necessarily change the rules merely because of one fact pattern. But I think what we're dealing with really highlights the fact, in my view, the markets were unprepared for this social media maelstrom, ultimately driving the price of a stock to a level that is entirely inconsistent with fundamentals, which then gives rise to a completely different question, which is, are we entering an era where fundamentals don't matter and it's only technical trading? And I think those are the structural issues that you really need an organization such as the SEC's Division of Trading and Markets really to look at. And there has not been a comprehensive examination of market structure since Chairman Levitt instituted one probably a little more than 20 years ago. This may be the time. We have a new chairman coming in who's very regulatory oriented, and all eyes are going to be on the chairman. And I think one of the other issues is that the timing could not have been worse for the SEC. In other words, the new chairman had not yet been, still has not yet been voted in by the Senate and approved by the president. As a result, there's no head of the Division of Enforcement,
right,
head of the Division of Trading Markets, General Counsel. They're all acting heads. And I think, the timing and the dynamics are all such that it just really had a really compelling and a need for sort of a reset at the market.
Jacob, it's Tim. Thanks for joining us. I guess my question is around social media. Because this seems to have been the genesis, at least, of where a lot of these reactions have happened. Do you think that there's going to be some assessment of social media in a way that it hasn't already been? Because, again, I think you've made it clear it's not about necessarily new regulations. It's about figuring out what went wrong. And is there some sense that social media regulations aren't strong enough to withstand this again?
Tim, it's a great question, because what you're really raising is, to what extent will the SEC get involved in regulating speech? And it always has not done so. There's Regulation FD that relates to issuer communications, corporate executive communications, and there are expectations with respect to corporate disclosures. We're talking about third parties. The SEC brought a case in October of last year involving a short and distort scheme, where social media was the vehicle for accomplishing that. It's wonderful to hear people say they're not acting in coordination, but we've heard short sellers claim that all of us, who've gone to jail, or fraudsters who've gone to jail, come out saying, now we're going to discover where fraud is in the market and act in the public market's best interest, just make it known. And in fact, they're still playing the system. So to me, I really want to wait and see what the investigation reveals, not what are people saying at the table, but were there coordinated communications? Because I do not expect there to be any regulation of speech, but I think the commission is very much on top of what is said on social media, right, and whether that's being used to manipulate the markets. And I think one of the statutes they're not looking at is Section 13D, where people acting as a group. I mean, how were some of the existing regulatory schemes being applied in the current market environment?
Right. Jacob, thank you for your thoughts. Appreciate it. Jacob Frankel. We had mentioned before that the testimony from the Reddit CEO is out. Julia Boorstin has gone through the testimony. She's got the details. Julia.
Yes, Reddit CEO Steve Huffman talking a lot about the moderation rules that they have on Reddit, and also talking specifically about Wall Street Bets, saying it is a real community and that the community enforces its own rules, both written and unwritten. He goes on to say they have analyzed the activity in Wall Street Bets to determine whether bots, foreign agents, or other bad actors played a significant role, saying they have not. In every metric we checked, the activity in Wall Street Bets was well within normal parameters, and its moderation tools were working as expected. He goes on to say, we will, of course, cooperate with valid legal requests from federal and state regulators. That said, we do believe that this community was well within the bounds of our own policies. Of course, it'll be very interesting to see, Melissa, what happens in terms of the questioning of Steve Huffman, but that is the statement that he has going into it.
All right, Julia, thank you. Julia Boorstin with the Reddit CEO testimony. Karen, I'll go to you on this. What in your mind is the most outstanding issue that the testimony could possibly address?
Well, there's two. That one that Julia was just talking about, whether they did in fact act as a group, because we've seen other shareholders, 13Ds have to be filed. So that's one question. But also, I think what should come of it is I'd like to see a lot more disclosure on the short side, right? You have to file a 13D on the long side if you're over 5%. No such filing duty exists for the short side. I think that would have made maybe it would have just made things more transparent, but maybe it would have happened just the same. I don't know. But it seemed to me there should be sort of an equal parity of disclosure for longs and shorts.
Yeah,
I hope
Dan,
they address that.
Dan?
Yeah, I mean, listen, I think, you know, short selling is a perfectly natural function. If this turns into like get shorty, I think that's a big waste of time. But I also agree with that prior guest that there's just not going to be too much teeth to this. We've seen time and time again when we see business leaders, whether it be Silicon Valley or whatever, they come to Congress and they go in front of these panels and the questions, it's just like, who knows less about what they're asking. So at the end of the day, it's a sideshow. No, I mean that. And I think that these statements are about as meaty as it gets right now.
Yeah, I mean, I think back to the Facebook Libra hearings, for instance, and it was clear as day that not many people knew anything about cryptocurrencies or what Facebook does or what Libra could be, Guy. So I'm not really, I'm not really anticipating any sort of like lights to be shown tomorrow on the dark corners of the market.
I mean, you talk about must-watch TV. That's going to be it. And I'd ask Vlad, the CEO of Robinhood. I'd say, listen, I'm just interested, sir. Who are your clients? Because in a zero commission world, it ain't the people paying zero commission. So what exactly are they to you? I mean, that would be a great question that I'd love to hear the answer to, because Robinhood clients, it's not the people on the other side of these trades. It's not the people paying zero commissions. It's something else going on there. So the answer to a higher power. I'd be interested to see what the answer would be on that one.
I agree 100% with that. And I think for everybody who has a Robinhood account out there, you have to ask yourself, am I being served? And what are my expectations? Because I think a lot of people out there, Tim, were expecting that they have certain rights. When in actuality, if you're not paying anything for a service, what do you have?
Well, I don't think that the fact that the service is free means you have no rights, and I don't think that they are treated differently whether they pay $10 a trade or zero. I believe, and again, but Guy's talking about essentially, pay for flow to big institutions who do a lot with that flow. And who have vision into the market that you'll never have. And again, this democratizing trading, let's be clear, the lack of full information exists for almost everybody in the market. And I think the other side of this, because we all want the individual investor or even the institutional investor. The SEC doesn't discriminate, by the way. They're here to protect all investors. But I think accountability is another side of this. If you actually believe you're going to be investing in something with zero fundamentals and you're along for the ride and you start thinking about terms like kamikaze investing, I can't help you. So again, let's see what happens. None of us expect a lot to come out of Congress, but I do think you have a case here where there could be more regulation coming out of this at some point.
Karen with a rare hand raise.
Can I just add one thing? Yes. Well, okay, I know you pay zero commissions, but you do get margin loans, right? So you're the customer often. I'm not saying they don't sell order flow. I agree with that completely, and that needs to be looked at. But you get a margin loan. That's how they make money as well, right? So that, I mean, it's potentially dynamite if you don't use it correctly, but you do get it.
What is interesting out of the Robinhood testimony, and this is just the last point on this, is that he does say that less than 3% of accounts are margin enabled. So they're not really making, I mean, in theory, they may not be making as much. I mean, there's some really interesting stats in terms of their customer base. The median customer account size is $240. The average customer account size is $5,000. I think there are going to be a lot of questions tomorrow, especially as lawmakers, they want to be before the people. And so where do they stand on Robinhood? That will be interesting tomorrow.
Shepard Smith here. Thanks for watching CNBC on YouTube.